Yo, RMJ, welcome back to the session. Hope you're ready to pick up right where we left off with the pouch group consolidation. We've got the lesson title and the basic goal on the board. Since you're looking to crush this homework, do you want to tackle this step by step from the top? Or is there a specific part of the consolidation, maybe intercompany eliminations, that you want to hit first? Solid. Step by step it is. We're gonna build this thing vertically, just like your notes. Here's our game plan for today. First up, we gotta map out the family tree. In accounting terms, we call this the group structure. It tells us who's in charge and who else owns a piece of the pie. So, looking at your material, Pouch bought 75% of SAC on January 1st, 20 by 2. Since Pouch owns more than 50%, they've got control. SAC is now the subsidiary. If Pouch owns 75%, that leaves 25% for the outsiders. We call those guys the non-controlling interest, or NCI. This percentage is huge because we'll need it later to split the profit. Makes sense so far, or should we move on to the numbers? All right, moving down the board, now we look at the core of the business, making sales. The key thing here is intercompany sales. Think of it like moving money from your left pocket to your right pocket. You aren't actually richer, right? Your notes say Saks sold goods to Pouch for $8 million. In our consolidated statement, we have to subtract this $8 million from both revenue and cost of sales so we don't double count them. We take Pouch's $24,500, add Saks $15,600, and then rip out that $8,000 intercompany sale. That gives us $32,100 for the group. Still with me on why we subtract that $8 million? Great question. Think about it like this. If you have two bank accounts and you move $10 from one to the other, you didn't actually earn $10, right? In accounting, we treat the whole group like one single body. If Saks sells to Pouch, the items haven't left the body yet. If we didn't subtract that $8 million, it would look like the group sold way more to the outside world than it actually did. Does that left pocket, right pocket thing make it click? Or should we try a different angle? You're thinking like a pro. We don't just stop at revenue. We have to cancel out both sides of the deal. Basically, every plus for one company that came from an internal deal has a matching minus we have to apply when we look at them as a group. If SAC reports revenue of $8,000, Pouch reports a cost of buying those goods of $8,000. To get the group's real profit, we have to strip that $8,000 out of both categories so they cancel each other out. The most common mistake students make is just hitting the revenue side and forgetting the cost side. You gotta do both. Ready to see the next layer where it gets a bit more technical? All right, let's get into the technical stuff. This is the provision for unrealized profit, or PUP. It's exactly how it's laid out in your notes. Here's the logic. Saks sold $8 million of goods to Pouch at a 25% markup. But your notes say that at the end of the year, 3/4 of those goods were sold to the outside world. We only care about the profit on the goods that are still inside the group. Since 3/4 were sold to the outside, 1/4 is left. That's where that 1/4 comes from. So, we have $400,000 of fake profit sitting in the inventory. Your notes say to add this 400 to the cost of sales because it effectively reduces the group's profit. Does that math for the 400 make sense to you? I hear you. Let's pull those numbers apart so you see exactly how they were built. First, the fraction 25 over 125. Since the 8 million is the selling price and the profit was a 25% markup on cost, the selling price represents 125%. To find the profit part of that 8 million, we multiply by 25 over 125. Next, the 1/4. The problem says 3/4 were sold to the outside world. That means those profits are now real. Only the ones still in the warehouse are unrealized. If 3/4 are gone, 1/4 is left. So, when we multiply them all together, 8,000 times 0.2, which is 1,600, then 1,600 times 0.25 gives us that final 400. Are those fractions clear now? Perfect. Now let's build the actual statement exactly like your notes. We're going to pull all these numbers together into one table. Look at that cost of sales line. We took Pouch's 14,000, added Saks 10,000, subtracted the 8,000 intercompany purchase, and then added back that 400 we just calculated for the unrealized profit. That gives us a total cost of sales of 16,400. When we subtract that from our revenue of 32,100, we get a profit before tax of 15,700. Tax is easy here. We just add Pouch's 5,000 and Saks 1,600 to get 6,600. Subtract that from our profit before tax, and the group profit for the year is 9,100. Does the flow of this table make sense before we move on to how we split that 9,100 profit?
No.
All right, final boss level. We have the total profit of 9,100, but now we have to show how much belongs to the parents and how much belongs to the NCI. We start with Saks' individual profit of 4,000, but remember, Sak was the one who made the sale to Pouch, so the unrealized profit of 400 has to be taken out of their profit first. That leaves SAC with an adjusted profit of $3,600. Since the NCI owns 25% of SAC, we give them 25% of that $3,600, which is $900. Finally, we just split the total group profit. If $900 goes to the NCI, the rest, $8,200, goes to the owners of Pouch. Everything adds back up to our $9,100. Does it make sense why we subtracted the $400 from SAC's profit specifically before calculating the NCI share? This is a super important detail. In this problem, SAC is the one who sold the goods. That means the $400 profit is currently sitting inside SAC's $4,000 profit. Because the group hasn't actually earned that $400 yet, we have to lower SAC's profit from $4,000 down to $3,600 before we give the NCI their 25% share. If Pouch had been the seller, we wouldn't touch SAC's numbers. But since SAC sold it, they are guilty of having that fake profit in their books. Does that clear up why we adjusted it this time? Exactly. Pouch is the big boss, the parent company. They bought the 75% stake in SAC. We've walked through the whole process. We mapped the group, wiped out the internal sales, fixed the unrealized profit, and split the final earnings. Here are those flashcards you asked for to help lock this in. Since we finished the problem, how are you feeling about these consolidated statements? Do you want to try another one or revisit any specific part of this one? Wait, I want to make sure we're on the same page. In this specific question, SAC was the seller. So SAC is definitely included because they're the ones who recorded that $8 million in sales and that profit. Are you thinking of a different problem where Pouch sold the SAC? Because if Pouch, the parent, is the seller, then the profit is sitting in the parent's books, not the subsidiaries. In that case, we wouldn't need to adjust the subsidiary's profit for the NCI calculation. If the parent is the seller, the NCI stockholders shouldn't be penalized because the fake profit isn't in their company's books. But since SAC was the seller here, we had to adjust SAC's profit to get the NCI's fair share. Ah, I see what you're getting at. You're talking about how we find that final owners of the parent number versus the NCI number. So, check this out. We always add the parent and the subsidiary together to get the big group total first. That's the 9,100. Then we figure out what the NCI share of the subsidiary is. Once we know the NCI is owed 900, we just subtract that from the total 9,100. Everything else that's left, the 8,200, belongs to the parent's owners. So in every consolidation, you're basically taking the whole group's profit and splitting it into two buckets. the parents' bucket and the NCI's bucket. Does that clear up how the parent and NCI are added to equal the total group profit? You got it. These are the big four formulas you need to keep in your back pocket for these problems. One last tip. Always check who the seller is before you touch that NCI calculation. It's the sneaky part that trips everyone up. We've crushed this problem. You've got the group structure, the eliminations, the PUP, and the final profit split all down on the board. You feeling like a consolidation boss now, or is there one last thing you want to double check? Boom! We're done. You crushed it today, RMJ. Take those notes and those flashcards and go dominate that homework. Catch you next time.